Hello and welcome to the second video for Chapter 12. We're going to start on page 1211, and we're going to talk about interest and penalties. The amount of penalties that you could accrue if you don't file a tax return on time can get large if you don't pay attention. There are different penalties for individuals and for partnerships and S corporations. The penalties, if they are incurred, are not deductible. All right, you cannot deduct a federal penalty, nor can you deduct a state tax penalty on a federal return. On the other hand, if you, for example, file a tax return late and the IRS takes its time, meaning more than 45 days to give you your refund, they may issue you some interest income. They'll pay you some interest, and you have to claim that on your tax return on line 8A. All right, so just to summarize what I just said, interest income from the IRS has to be claimed as income on your return. Penalties paid to the IRS cannot be claimed on any return. All right. If you are charged a penalty, you will probably also be charged interest, and the interest rate right now is roughly 4% per year. Okay. Let's take a look at page 1212. All right. This will be on your next exam, so learn how to compute this. All right. If you are going to do taxes for a living, this would be my suggestion. All right. Number one, if you have business clients that file partnerships or S corporation returns, which are due by March 15th for a calendar year company, get into the habit of filing extensions for your clients on March 1st. All right. You will probably do this electronically, so you'll get an acknowledgement from the IRS probably within 24 hours. Okay, when you do so, you are eliminating the major penalty, which is called the failure to file penalty. All right, I would also do the same for your individual tax clients. All right, since their returns are due on April 15th, I would get into the practice of filing extensions for your clients on April 1st. Again, you should get the acknowledgement from IRS within 24 hours. In the state of Indiana, there is no reason to file a state extension. All right, Indiana recognizes the federal extension. So when you file for a federal extension using Form 4868 for individuals, in Form 7004 for partnerships and S corporations and corporations, okay, except that regular corporation returns aren't due until April 15th. The Indiana recognizes that extension, okay, so you don't need to file a separate one. Okay, so why is the failure to file penalty so big? Well, let's take a look at page 1212. All right, it tells you on there that the failure to file penalty is 5% per month up to a 25% total for every month that your return is not filed or your extension isn't filed. Okay, so let's say you forget to file an extension and you file your tax return on April 25th, okay? It doesn't matter how far into the month you are. That counts as 1 month. All right, now remember also that these penalties are only assessed if you owe on your return. All right, there is no failure to file penalty or a failure to pay penalty if you're getting a refund. That's why the oldest myth about tax law is that you have to file your tax return by April 15th. No, you only need to file your tax return by April 15th if you owe. Okay, so, you know, if you fail to file your penalty or fail to file your return on time, okay, the penalty is 5% per month. If you fail to pay your taxes that are due on the return by April 15th, okay, then the penalty is 0.5% per month, or 1/10 of the failure to file. This is why the extensions are so important. Okay, you know, the failure to file penalty is 10 times greater than the failure to pay penalty. The reason for this is that if you don't file, the IRS doesn't know, you know, how much you owe for that particular year. If you file and can't pay on time, okay, at least they've got your return. All right. If you never pay those taxes, of course, then you come back to, you know, the collections process where they can come in, you know, take your assets if they wanted to. Okay. If you are subject to both penalties, the failure to file and the failure to pay, only the larger one will be assessed. Okay. So again, this is on your next test. So let's take a look at the example on page 1212. It says Nancy filed her tax return 3.5 months after the due date, and she had not requested an extension to file. The failure to file was not due to fraud. We'll get to that later. She included with her late return a check for $2,000, which was the balance of the taxes she owed. Disregarding interest, her penalties are as follows. The failure to pay is $2,000 times 0.5% times 4 months, or $40. The failure to file penalty is 10 times greater. It's $400. But because she is subject to both penalties, the failure to pay penalty is disregarded and the failure to file penalty is assessed, and Nancy owes $400 plus, you know, 4% interest per year. Okay, and you know, she will have to pay that within a certain amount of time. Otherwise, she can file with the IRS for you know, a payment plan. All right, we talked about that in the previous video. Okay, so again, you know, if you're going to do taxes for a living, do your clients a favor and file an extension for them. All right. They expect you to file an extension. All right. Once you've done business with them for 1 year, okay, and if they tend to procrastinate, you know, file the extension for them. All right. Most tax software companies don't charge you for an extension. They're only going to charge you if you actually electronically file the return. So the only thing that's costing you is a little bit of time. You'll keep the client. All right. You'll save them a lot of money. All right, and you'll save yourself a lot of headache, because again, remember, the client is expecting you to take care of them. And if you don't file an extension for an existing client, you not only could lose that client, but you know, they might actually come after you and try to sue you for doing something that they expected you to do, even though they probably wouldn't win. But okay, all right. Then you have a couple other penalties. Let's go ahead and take a look at them. There's an accuracy-related penalty of 20%. So if you look at the bottom of 1213 and the top of 12, or the bottom of 1212 and the top of page 1213, all right, it tells you that there's a penalty of 20%, right, of the applicable underpayment. All right, so how do you know that you have an underpayment? All right, well, it tells you. All right, it says the required amount of tax exceeds the tax shown on the taxpayer's return by the greater of 10% of the amount of the tax, or $5,000. Okay, so that means somebody really underreported their income. All right, now they're not saying you're negligent, they're just saying that you forgot to report a lot of income. All right, when you have that, they are going to hit you with a flat 20% negligence penalty of the taxes that were not reported. So in the example on page 1213, it says Kim underpaid her taxes for the current year by $15,000. Okay, now that's not the income she didn't report. That's the amount of tax that she should have paid, but she didn't because she underreported her income. All right, so she not only owes the $15,000 in tax, she owes a $3,000 accuracy-related penalty and plus interest. Okay, going back to the day that the return was due. Okay, then you have a fraud penalty. All right, if the IRS can prove that you committed fraud on your tax return, you know, you had an ongoing business and you never reported any income from it, all right, the penalty is 75% of the taxes that were not paid and reported on the return. Okay, you're not going to see that too often. All right, the most common ones that you're going to see are the failure to pay and the failure to file penalties, and that's why I put it on your exam. Okay, and then on page 1214, there are some miscellaneous penalties that you should be aware of. All right, most of these you will never going to see, but you might want to take a look at the fourth bullet down. All right, I believe we talked a little bit about that in chapter 9, and that's the penalty if you don't pay your payroll taxes on time. Okay, the penalty could be 2, 5, or 10% depending upon the number of days that the payroll taxes are overdue, and you can go back and look in chapter 9 for that amount. Okay. Lastly, the one penalty that I want to talk about, which is not mentioned in your book, is, again, coming back to the importance of filing your extensions on time. If you have business clients, okay, if they are late in filing their partnership or S corporation returns by March 15th for a calendar year company, or April 15th for a regular subchapter C corporation, the penalty, forget the C corporation, for partnerships and S corporations, the penalty is $195 per month per partner. All right. Okay. So if you had a partnership that had 3 partners, all right, the penalty is $585 per month. All right, until the return is filed. All right, and by the way, extensions are due by the due date. All right, don't attempt to file an extension after the due date is passed. The IRS will not recognize it. So for partnerships and S corps, all right, for a calendar year company, again, their returns are due by March 15th. All right. Don't try to file an extension on March 16th. It's not going to work. All right. Just get the return done as fast as possible. And if they get hit with a late filing penalty that I just mentioned, the $195 per partner or shareholder per month, the IRS has a one-time abatement program that you can use. Just tell them, hey, I messed up, please excuse the penalty this one time, and they'll usually do it. All right, but that's a one-time forgiveness. Okay. All right, so that ends this video on interest and penalties.